Large drop coming for us in the overall market on Friday, about 200 points down in your E-minis, in your SPOs. So we're going to see what type of recovery, if any, we get going into Monday's trading session. Now we're going to do a little full market overview here. We're going to look at a couple ETFs. We're going to do something different. We're going to start off with gold, actually. So you did have that big pullback overall in the market last week. But also, we have to take note that gold did the same thing as well. So usually when you do get a market that is sort of healthy, you get an inverse correlation in your gold and your bonds with your overall market. Please note that this past week, gold pulled back, and the overall market did as well. So we have to kind of keep that in mind as we're going forward in here. That means that either our recovery could be very sharp or there is more here to kind of pull back to on the horizon. So we're going to see what happens as we open up Sunday night with our futures and then see where pre-market takes us Monday morning. Your gold in here, what are we looking at? Well, to the upside, 400 cycle level, that's going to be key for us. We're going to try to climb back in this overall structure right here. That's going to be that 405 market. Anything above there, we're going to be focusing on that 417, about 419 area in here. That is going to be a good resistance for us. To the downside, that 50-day SMA sitting right at 388 is going to be our first set of footing in here. And then anything outside of there, we are looking down here at that 376. We're going to also take a look at the SPY in here. This is going to be the ETF of the S&P 500. You can see that we mentioned last week, we're getting a little top heavy in here. We're going to see how much of a pullback we are going to get and when. Obviously, that came last week, 20 points down. We ended the day 737, but also after market, immediately after pre-market, we ended up crashing down to those 734s, 735 areas. So we're going to see what the futures do to us on Sunday, and then how sharp a recovery, if any, are we going to get on Monday in here. To the upside, what are we looking at? Well, 749, that's kind of like the big area, but we're also going to watch that 740 in between where we are and then that 749. Anything out 749, we're going to be looking at 760, which is our highs that came in here this past week. Now to the downside, what are we looking at? Well, we are basically focusing on that 726, but we are going to watch that 730 level as well. So 730, 726, 724, and then eventually back down here to that main 712 area. You can see right here, that's a spot that we've been mentioning for quite some time. So that's what we're looking at in here. Your IV rank in the overall market, obviously everything popped in here. So your IV rank is sitting right at 56. You have about an $8 expected move being priced in by just Monday's expiration. So huge expected move being priced in by your options traders in here. Take advantage of this volatility. Play how you can to what's best for you to take advantage of that volatility. You have a $12 expected move priced in by Wednesday, Friday, about 15. So very, very large expected moves in here in your SPY. We're also going to take a look at our QQQs in here. We're sitting basically, it's more or less kind of the same story chart wise on the Qs in here, just as the S&Ps we mentioned last week. Yep, getting a little bit top heavy, huge pullback in here overall. We're down bigly in here on Friday, basically down around almost 36 points just in one day in here in our QQQs. That's because of all those harsh pullbacks that we got in the AI stocks. So this might recover quicker just if people start buying this up. Obviously, this is where your bubble is. So if people start buying this up, this is probably going to recover quicker than the overall markets, just because tech and AI is super heavy right now. This is where your bubble and everything is. So if we do not get a pop in here to the downside, we're going to be looking at that 696 mark. Then we're watching that 688 and then 675. And then to the upside in here, if we do get a nice little pop, watch for the 711, 722s, and then our 738s in here. As far as our implied volatility goes, it's 82. So it's pretty high compared to the SPY, right? So your IV rank was only about what, 56, where we have 82 in our Qs in here. That's going to give us a priced in expected move that is going to be larger than the S&Ps, and that's about $16. So more or less double the expected move is being priced in our Qs in here as compared to the SPY. So let's see how that changes things as we continue forward in here. So $16 expected move by Monday, Wednesday about 20 bucks. If you go all the way up to Friday, you're looking at right around a $24 expected move being priced in. So crazy movement in here in the past just day in the overall market. And this is coming off basically right after we said, hey, the market's looking kind of top heavy. And then what do you know? Boom, we get a nice, huge, big pullback in here. Hopefully, this is a gift to a lot of us. Hopefully, we can kind of take advantage of this volatility and see what happens in here as we continue forward. Your TLT in here, you kind of like a little consolidating, right? So not a big pop in here. So that is kind of the overall the question, right? That what we kind of have to keep this in mind is that we had those big pullbacks in the overall markets, your Qs and your SPYs, but yet you did not get that huge pop in your bonds, and you actually had a pullback in gold. So you have to kind of keep that in mind. What is going on in here? Is that telling us, hey, they're just going to buy this right back up and we're going to be back where we are here in about a week or so? Or is there more to come, right? We have to kind of get where we're trading inversely like a normalized market would, right? So with your bonds and your gold trading inversely than the market, rather than your bonds kind of just flaking out, not really doing anything. And then you're also getting that pullback in your gold as well. So TLT on the weekly chart, what are we looking at in here? Obviously, we're looking at 86.90. That's going to be the big area for us. Anything outside of that, we're looking at that 50-day SMA here, that pink line. That's going to be 87.70. And then to the downside, we're going to be focusing on that 85 flat level. And then anything outside of that, we're going to be focusing down here at that 82.75 area. So that is what we have looked up here. As for our overall markets in here, keep in mind that we're not getting that normalized skew, that normalized correlation between our bonds and our gold and our overall market. So please keep that in mind. So don't be surprised if we get just a huge pop in here in the next few days and a nice big recovery back to where we are. But also don't be surprised if we can continue to pull back, right? Because this has not normalized yet. Nothing is, it seems, as normal as it usually is for the most part. So kind of keep all of that in mind as we're going forward. Huge expected moves, huge pullbacks we got here on Friday, and volatilities through the implied volatilities through the roof. We got huge tolerances built in on both sides of the coin in here from our options traders. So let's see what happens as we open up on Sunday night with our futures, and then see what happens pre-market Monday morning. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you are interested, and you can find all of our socials in the description below.